All right, welcome to our panel at FinTech and PayTech Connect Summit APAC 2021. Our topic for this session is the unstoppable rise of digital assets, compete, collaborate, or both. And there are a lot of critical and unanswered questions that our panel is going to help us to unpack and explore as part of this session. Now, it's great to have so many friends and audience members tuned in from all around the world and all across Asia. I'll be your moderator for this session. My name is Ali Mandavji, managing partner at Blockchain Founders Fund, which invests in and venture builds top-tier startups and consults organizations such as the United Nations. I serve on the board of two public companies in the blockchain space, CryptoStar, which is a Toronto Stock Exchange venture company, and Mechanical Technologies, which is a NASDAQ-listed company, and also serve as a senior blockchain fellow to INSEAD. More importantly, we have a phenomenal panel here with us today. First off, we have Maria Gomez de la Villa, the Distributed Ledger Technology Program Director at ING. Next, we have Irfan Mohammed, APAC Lead at State Street. Next, we have Mohammed Zarakat, Director of EMEA Digital Lead at Bank of New York Mellon. And third, we have Grace Chong, Regulatory and ICT Lead at Simmons & Simmons. Now, let's jump straight into it. We're seeing, major financial institutions and well-known organizations not only talking about digital assets, but making active steps to move into the space over the past year. And this trend seems to be accelerating. Mohammed, why don't you set the stage for us? Why are major financial institutions joining the space and why now?
Yeah, thanks, Ali. Good morning, good afternoon, good evening, wherever you are. This is a very good question, Ali. So I guess there are many reasons why financial institutions are joining the space. But for us, there are three main reasons, if I want to call them out. The very first is actually client demands. Just like with everything we do, our products and services are driven by client demands. So over the last months and years, we've been seeing a growing demand coming from across board, from across the client segments, asking for different about digital assets for different reasons. Some of them really just want to learn more about the space. Some of them want to invest. But really for us, it's this client demand has been growing exponentially. And that's one of the very first reasons why we initially started to think about this. The second one is really innovation. And as you know, there are a lot of things in the digital assets and digital and blockchain technology. Things within this space really opens the door for a lot of new applications across the industry. So for us as a bank, when we look at this space, we really look at it, how does this space actually, or the innovation happening in this space impacts our clients? How can we support them with their changing needs? And how can actually, what is the opportunity exist in this space? Whether that's, liquidity needs they have, whether there are digital asset safekeeping needs they have, or even, funding needs. So we've been seeing some of those, and there are a lot of innovation literally that tackles every one of those I mentioned. And then again, we thought, there is benefit out there, and based on our clients' needs, we're looking at this and we're trying to help them. And I think the very last piece I will add in here is really regulatory clarity. Over the last few months and years as well, I'd say, we've been seeing a bit more regulatory clarity in there coming across the different part of the world. This is certainly helpful. As for us, regulation, brings clarification, which in turn brings adoption. So to sum this up, I think we're really at an inflection point when it comes to digital assets, which we regard as an emerging asset class. And just actually like Rita McGrath recently told me, inflection points come slowly, and then suddenly. And I think we are at this inflection point right now.
Fantastic, Mohammed. And Irfan, at State Street, do you see it in a similar way? Is your efforts growing in the space, or do you see this sort of staying as a relatively small group at State Street?
No, not at all, actually. And again, thank you very much for having me and Good morning, good afternoon, good evening to everyone listening in. So at State Street, we follow a similar vision to BNY Mellon in that we have observed a huge increase in demand from institutional types of investors, and who had originally, and the demand that we saw had originally come from high net worth, family offices, hedge funds, and the like, and that's really kind of bled into the mainstream, as it were, as far as financial services are concerned. To that end, we have endeavored to move our small group into an entire division, which is looking at creating solutions based around cryptocurrency, tokenization, blockchain, and central bank digital currency. And as Mohammed had actually referred to, the key driver behind that is really around client demand and regulatory clarity. As mature jurisdictions start to speak about things in more harmonious terms, it allows institutions such as ourselves to be able to develop seamless solutions across multiple jurisdictions in which our clients actually are based and take part in financial activity. And so having a scalable security, institutional grade security model that enables our traditional client base to actually get into this space is imperative. So all of those things combined, together with the keen interest of our clients to not only learn more but look to benefit from the return profile of these types of assets, is really driving the space and actually driving innovation both on the institutional side but also from our side as well.
Fantastic. And Mariana, let's go over to you. How do major institutions innovate in this space, and how is ING playing a role?
Well, I think you have several roles that you can actually play, right? We have seen, for example, that there are pretty much, 4 major macro trends, right? You see things happening from the first use case, which was obviously, Bitcoin and the use of blockchains, into how it has developed or evolved until now. And then how in parallel, different macro trends have been as well developed. For example, you have the macro trend of central bank digital currencies, right? There's a lot of questions, a lot of experimentation that has happened there. And then you still need to think about, where do you actually could play a role, what kind of opportunities this macro trend could develop for you, and whether you want to be a leader or a fast follower, or maybe just an observer until things are more defined, etc. And the same thing you could actually think of, for example, another trend, which is decentralized finance, right? It's really interesting that coming back from coming out actually of such a evolution with COVID help or enabled, then you find that a lot of the client behavior has changed. So the question now is, how are you gonna graph what has happened around you, right? Together with this change on behavior of your clients and the expectations as well, because they change expectations, right? And then how are you gonna serve them now? When you have, for example, a higher degree of automation in some of the protocols or in some of the things that you were actually rendering as financial services in this decentralized finance world, right? Do you want to portray that and find new opportunities? Do you want to keep, with your strategic stack, for example, and developing that? So which elements are you going to grab from the new innovation, as Mohammed, as Irfan are mentioning, and which ones are you going to maintain as, maybe your competitive advantage, and how are you going to merge that? Then you can foresee as well, for example, things happening on a third trend, which is the asset tokenization itself, right? That is actually enabling all the changes in the financial market infrastructure into a digital infrastructure that in the past, was not possible. And there were some questions as well, which gives a good leadway to the fourth macro trend, which is advancement in technology and what you can see happening there. Because a lot of the issues that we had in the past have been now solved. So how are you gonna, solve them when actually you are deploying this technology to take advantage in certain asset classes, for example, in the areas of lending, in the areas of housing, in the areas of securitization, et cetera, right? So I think it's a really interesting moment to be in, and this this kind of like inflection point where you grab what you have learned, about while being, coming out from COVID, while you grab what you have learned, what's happening in the ecosystem, and then how is everybody going to merge that? How is everybody going to find those opportunities or niche markets that could potentially be born now, and then how is that going to play a role in the future? So it's the way we see it. I think we have a quite positive attitude in that sense as an ecosystem, and as ING, obviously, we always see it as an opportunity. And you can define how are you going to seize it again, depending on the asset class, depending on your appetite, depending on your framework, your regulation as well, et cetera, et cetera.
Fantastic. No, I think that was a very good overview on that. And Grace, what role do you see Simmons & Simmons playing in the industry, and how are you thinking about the current regulatory landscape? I mean, China over the weekend, for example, banned crypto. Again, some people would say, does this have any foreseeable impact?
Yes. So on this point, it was quite funny. I think I was seeing all the Twitter memes on how is this the 20th or the 21st time China has banned crypto, and we look the same. And perhaps picking up on the last point, I think I've been in this sector, covering this sector for about 5-6 years now. I started in Hong Kong and later on moved to Singapore, but still overlooking regulatory changes and advising on trends on both Singapore and Hong Kong. And I would say that the difference, I think, would be that there is now greater possibly collaboration between some of the Chinese authorities that we have not seen in the past. And this also comes into play together with other China developments where they were making certain observations about ants, which created that whole saga on, recent moves of looking at data protection on a more, keen and closer level, and some of the developments regarding, blockchain providers and registrations. So I think there's greater nervousness this time round this year, especially since some of the language coming from the Chinese authorities also talks about stable coins, and their knowledge has clearly improved on how to go out and enforce the new requirements on the players. So I think this time it could be different, but everyone's watching and with bated breath, especially on the impact in Hong Kong, because Hong Kong was due to release their FSTB consultation shortly at the end of this year. So how will this affect Hong Kong in light of all the political developments in Hong Kong, which are all very interesting queries. So I would say that in the last 5 years, I've seen things really change in this sector. We did indeed start, as I call it, in the Wild Wild West, where we had a lot of the initial coin offerings, general talk about crypto, and the interest in the institutional space was always all more focused on blockchain, RegTech, and for a very long time we kept hearing from the institutional clients and the banks that we worked with, crypto is just something that will fade away. It's just a temporary interest and will not sustain. But I think things have grown significantly, especially in the last 2 years. We have worked with banks and certain partnerships that they have with tech players. We have been involved in building for the banks, some of the offerings and doing a lot of the regulatory surveys across, hundreds of countries, looking at, for example, the offering of products, whether this is characterized as securities, the suitability requirements in different countries. We even got involved in helping certain clients do a tracker across multiple of these countries to track the regulations on a more closer basis, which only goes to show that I think institutional interest has increased. I think Mohammed was very astute when he pointed out, family offices were the first to enter perhaps in this space, but we did see it move as regulatory clarity improved. We did see more and more institutional players, the private hedge funds, the big banks also move into this sector with rapid succession, especially this year. We did see greater interest in getting licensed in not just one, but multiple jurisdictions. So I think for a firm like Simmons & Simmons, there has always been different types of opportunities as regulatory developments evolve. I think as a regulatory lawyer, I've definitely learned a lot from players in this space, and it's very exciting, very enjoyable. Yeah.
Fantastic. I also saw plenty of those memes, as I'm sure many people did on social media. But I think that these are still quite important to pay attention to, right? Because it's not only China. I mean, China's obviously has one angle that we're seeing, but you're seeing a lot of AML crackdowns and other sort of regulatory crackdowns right now around the world. I mean, open to sort of the entire panel, what are some of the major risks you foresee around this? We also saw, say, recent settlements, BitMEX with the US government and things like that. Anyone want to jump in on thoughts around this? I guess, do we have thoughts on the State Street side at all, or Grace, if you've got thoughts?
Well, if we have I guess I'll start off being the regulatory lawyer in this space. Definitely, I think on that ground we have seen many evolving developments. So I think on what you mentioned, definitely one of the trends which has picked up is that I think in terms of different AML developments and all, we are seeing closer interest, especially on decentralized and peer-to-peer models. So in the past, in the first consultation which FATF released, the Financial Action Task Force released, I think they focus very much on centralized exchanges, the main platforms. But as the definition of a vast virtual asset service provider widened, they started looking at decentralized protocols. DeFi is under scrutiny. They started looking at NFTs, and could NFTs be something which is also seen as an asset, which is quite interesting. And I think the scope of regulation is basically broadening, such that the expectations on AML, on market integrity, on other expectations on fit and properness, which we usually saw as key themes within the traditional space, are now entering the language of the of basically the space of the virtual asset players as well, which means that traditional players, even when they are doing such activity and they are making their relevant notifications to the regulators, I think the regulators even more now will expect certain conduct requirements, we expect certain preparations, which is in line with traditional financial institutions, making sure that they have a sufficient understanding in this space to even explore an offering, especially one that is global, because gradually you cannot just be relying on just entry first and think about it later. So so this is a little 2 cents from me. Yeah.
And maybe just to build on Grace's kind of very, very competent explanation in terms of the way in which some of the evolution has happened from a regulatory perspective. Regulators are also learning about this space. And so there's a lot of education going on in terms of their own understanding as to how to be able to regulate in a manner which is effectively steeped in their desire to be able to protect retail investors from any financial instability. And these are important things that they're taking into consideration. So whilst it might seem that certain jurisdictions are performing relatively draconian measures in order to be able to stem the flow of assets going into things like crypto exchanges, it's all to do with the fact that they're trying to protect the end investors. So it might be cautious, but we all have to remind ourselves that the Bitcoin white paper was only released 12 or so years ago, and as an asset class, it's still very young. And in terms of the parameters that we put in place, they are emerging and they're evolving very, very quickly. But equally, we have to temper our enthusiasm with some measure of guardrails in order to be able to protect the underlying retail investors that might be a little less able to be able to take large hits from a volatility standpoint. Of assets that are denoted to have swings of highs and lows in very, very quick succession. So again, maybe a bit of a handout to some of our regulatory folks that we work very closely with across the world, but that's seemingly what our understanding is. And to Grace's point earlier, they're getting smarter and they're getting better able to be able to assimilate that information very, very quickly. And so you're starting to see more pragmatic measures come into place in order to be able to look to see if they might be able to create something a little bit more innovative in terms of them fostering the ecosystem, but also taking a measured approach when going down that road.
Yeah, if I might just add a minor thing, of course, and I guess Irfan and Grace covered it very well. And within the Bank of New York Mellon, we had a whole team that are more smart than me that are covering this particular area and focus on regulation. But the good thing, we're seeing actually a different approach of regulation in different parts of the world. So nothing is exact. It's not like what is happening in one jurisdiction is exactly happening somewhere else. So diversity is good. That also tells you there are just a lot of things happening differently, and there's different approach that could attract also, that could at times bring opportunities, or at the times it could deter. And that's something worth looking at. That is one piece. And of course, the other piece beyond what Irfan mentioned around the retail, when we look also at institutional clients or institutions like us, we are regulated institutions. Our clients expect, that we comply with regulation, we comply with regulation. So we're actually working hands on hand with the regulator, because we're all actually learning about this space, not only the regulators themselves, in order to bring eventually this adoption and clarification needed across the board. So whoever is investing is more, comes there at ease when they ask those questions around regulation.
Absolutely. So I think those were, very insightful thoughts. And I think sort of to wrap up this piece of the discussion, I mean, there's a lot of excitement, from institutionals, it sounds like, but also challenges related to, some of the regulatory landscape that we're hearing, the fact that it's still, a very new space, new asset class, as was mentioned. And I want to, move on to, better understanding the movement of the actual capital, from major institutions, from high net worths in the space. Mohammed, maybe we can start with you. If we're looking at high net worth individuals and institutional capital, are they getting exposure directly to these assets, or are we talking about indirect exposure, perhaps through ETFs and other instruments? Perhaps you can shed some light on what you're seeing in the market.
Sure, and certainly this is a very good question. Let me tell you a bit more about the institutional side, which I'm closer to, I'd say, but I assume the same actually apply both sides of the coin. In fact, the answer is actually both. Depends on the client profile and their needs. So for example, from institutional perspective, we've seen companies like MicroStrategy, Tesla, taking one approach by going to buy and hold Bitcoin directly, so having access directly and ownership of that particular asset. But also there are other institutions who doesn't necessarily want to own crypto directly, as you mentioned, and they are looking for other solutions. And there are already existing solutions like the crypto-backed ETPs or ETFs that are available in Europe mainly and in Canada. In the US, you have institutions going through the Grayscale Bitcoin Trust, which you probably know about for sure, with whom actually also we recently partnered to provide them services, as that's just quote unquote on the side, fund services and accounting services. And of course, if they become, and once the regulation there approves ETFs, we will provide them with transfer agency. So we'll also tend to believe more and more clients will come and consume those ETFs when they are also available in the US. For us, as a bank, we're anyways working with all types of clients, regardless of their needs. If they want to hold and get access to the assets themselves, we are trying to ensure that we have services that we can provide them there, but also support them in other areas if they want to go and get access to this emerging asset class indirectly through the different mechanism I mentioned. But even if it's completely different, as like owning a stock of a company that invests in an underlying assets related to crypto world.
Very interesting, and I think that helps us to understand sort of what's really going on in that piece where different companies are looking to get exposure to the asset. I mean, Mariana, what about insuring these assets? Does ING get involved in those aspects, or how is there trust and safety in, say, the digital assets for these institutional players? I mean, you hear stories all the time of poor security, poor processes, bad actors that leads to that digital assets being moved in seconds from wallets. What is the recourse for these larger investors?
Yeah, I think you touched on a really important part, because that's exactly the challenge, right? When you are talking about an institution that has trust as one of the major added value services that provides to the economy and to a certain society, then you have a huge responsibility, and then you have to question yourself, okay, does this new asset class, whatever it may be, whether that's DeFi, whether that's cryptocurrencies, whether that's, direct or indirect exposure, does it actually fall within your appetite, right? And if it does, then how are you going to ensure that your consumers are protected? Because right now they are not, right? If my mom were to buy a cryptocurrency and then she loses her wallet, or she loses the Bitcoin or whatever, and I don't know how much of it is lost, but it's supposed to be claimed like over 40% or something like that, then what do you do as an institution, right? Because my mom would not understand, for example, that she lost it, and that she when she lost the private key, maybe, she lost it, and then there's no one else to call, right? You learn that the hard way. And if you as an institution offer these kind of services, well, the first thing they're going to call is call customer services from ING and say, hey, how do I recover it? And then it's like, oh, bad news, it was a Bitcoin, so we cannot do anything about it. So you really have to question yourself, okay, how am I going to render these services? And that's probably why a lot of the experimentation that happened, down in 2016 was more towards institutional, towards wholesale, because that was in a more controlled environment, right? And now that it's moving towards the retail, you really have to be prepared for that. And then it's all these people that is innovating and that is, leading this revolution or evolution, actually, the ones that also need to be prepared to endure the processes that it means, to go through in order to deploy something that is actually enterprise, which takes a lot of time. It takes a lot of stamina. It takes a lot of conversations. It's not something that you just can deploy and then, oops, we got a hack, because then you ruin the whole, your license is even at stake. So this is exactly what I was mentioning in the beginning when I talk about opportunities, or maybe, that you really have to think yourself, okay, do you want to better, maybe in a certain asset class, just follow, what are really those advantages of being the first, and whether being the first, it also offers you the competitive advantage that maybe, in certain ecosystems, it might not exist because you need the network effect. So you cannot just I guess go to the battle unprepared. You really need a stronger strategy where you ask the right questions, and those questions are discussed at all levels of organization, because you do need that support as well in order to deploy something in production. So having said that, it's a lot of preparation, a lot of education at all levels, and first of all, I think it's as well analyzing exactly what your customer is asking from you, right? Is this because of a trend? Is this because they have the surplus on liquidity? Is it because, they don't even know what they're getting themselves to, and it's fear of missing out? Is the why? What you have to understand the why. Why are you doing this, right? And then you can define the what and how. So that would be pretty much our standpoint as ING, I guess.
Very interesting. No, and I agree. I think with a lot of that, I mean, it's, there has to be a very calm, collective way to think about how this is going to work for the consumer, right? I guess, Grace, moving over to you, how does custody come into play here? Do we sort of foresee this fully solving the problem for institutions, or even, if this was sort of rolled out fully to consumers of those institutions? Do you see that sort of being a larger and larger, say, requirement for this solution, or do you see it, potentially going another way?
Sure. So I thought it may be interesting to connect it with some of the comments which Mariana made on insurance as well, because from a legal perspective, there had been previously a lot of discussion on whether insurance would be sufficient because of the war exclusion clauses which appear in a lot of these insurance contracts, and whether if you have a cybersecurity hack which is influenced by a certain government, whether it could mean a whole exclusion from insurance itself. So I do think that the question on custody depends very much on your role in this industry sector and whether you're a regulated entity as such. Because more and more, if you are a regulated entity like an asset manager who is looking to manage virtual asset funds and get licensed, like in the case of the Hong Kong regime, the regulator will put on certain expectations on such entities. So for example, under the pro forma terms and conditions for asset managers that manage more than 10% of their funds in Hong Kong, you are expected in one of the clauses to, I quote, use reasonable endeavors to acquire and maintain adequate insurance cover over these assets. And normally a lot of these regulated entities, they don't get direct insurance, but instead what they say is that because they want to fulfill the independent custody arrangement by engaging an institutional custodian, something like Bank of New York Mellon or BitGo, or one of those other entities, you would then look at the insurance coverage for those other entities, and you will seek to understand more about those details and convince the regulator that you understand enough about the insurance coverage and that it could cover your arrangements. So more and more we are seeing the expectation from the regulators for independent custody instead of self-custody, which is quite different from the discussion from banks, because for banks traditionally, if they wish to self-custodize, I think the MAS or some other regulator operating in the region may be more amenable to that, but generally the approach has been for independent custody. So what this does mean is that there are an emerging group of custodians that I've seen that we are working with also who are very interested in obtaining institutional licenses to offer custody in this space. So there are a lot of up and coming new players, both focusing on tech players, exchanges, but also looking at partnering with banks. So for example, we saw Standard Chartered Bank do a tie-up, to offer custody. We saw DBS, take on custody by, white labeling an OSL solution. So we are seeing more partnerships in the industry to offer this. And the question of insurance and protections and all thus becomes a very interesting question, because you are overlaying the traditional with some of the modern thinking on how you hold private keys, how you store a lot of these assets. And so I think the industry is learning at the same time as the traditional institutions. Yeah.
Absolutely. I mean, I hear it all the time. I mean, we have conversations with a lot of, major institutions, Fortune 500s over the last few years, looking at, how do we actually go about securing these assets, delivering these assets, whether or not they should be using a custodian or not. So, I've heard a lot of this as well, sort of in my role. But Irfan, moving over just, quickly in terms of how institutions are treating the accounting and volatility of these assets, because, I mean, is this something that they should be worried about? Is this something that they need to be talking more about? Maybe you can just shed some light on this.
Sure, I'll certainly try. It's not an easy subject, but in terms of accounting, what we've observed is that there's been an increasing interest in order to be able to ensure that you have kind of bedrock services associated with funds that people are looking to launch. So whether it be fund administration, transfer agency, custody, and all of the, I guess, back office asset servicing type of provisions that banks such as ourselves and BNY Mellon and other global custodians offer up to their end clients from a wholesale perspective. We've certainly seen a big increase in terms of the interest around accounting services for funds that invest directly or into derivative products of cryptocurrencies, and therefore there's been a lot of learning for our side in terms of understanding where that price source comes from, how reliable it can be, whether we want to be able to provide a 24/7 NAV, what that would entail operationally, and other such considerations. As far as we can understand in terms of what the market is requiring and demanding at the moment, it's a replication really of what we're seeing in traditional ETF markets. So State Street, we've been kind of an innovator in the ETF market for a very long time, and we're proud in terms of our footprint across the US and Europe, and we're really starting to make big strides in Asia Pacific. Interestingly, in terms of the accounting standards that we're starting to see, we've had a bit of a shot in the arm in terms of one of our investments into a company called Luca, who are really kind of pushing the envelope as far as data standards are concerned for digital assets. And we've also launched a front to back offering in terms of accounting services together with Luca for alternative clients. So again, in terms of the accounting practices and things like that, we need to take into consideration the jurisdiction, the requirements specifically around the type of fund that people are looking to launch into, whether it be IFRS or another accounting standard, US GAAP. These are all the considerations that need to be taken into account, but also thinking about the other aspects around taxation, reporting, that they're all complementary in terms of what we need to take into consideration as an industry for provision of appropriate accounting services. So yeah, I mean, there's a lot to take on, Ali, in terms of what we're thinking about in this space, and again, what we're trying to do, and maybe this is the wrong approach, is retrofit a new asset class into an old model. But again, those are the standards that we're working with, and as has been mentioned in the previous section, there is evolution in this space in terms of the way in which accounting standards are kind of looking at it. And you know, we're working with both the authorities from a policy standpoint, but also looking to kind of try and push you know, what will be the standards as we move forward. I mean, even if you take a look at Bitcoin, Bitcoin has 8 decimal places. Traditional accounting platforms can really deal with maybe 3, maybe 4. And if you bump that up to Ethereum, I think it's 18 decimal points. So Cardano is a little less you know, challenging in terms of being 6, but these are all practical implications that we've got to take into account when thinking about accounting. No pun intended.
All right, so it sounds like we're going to need an entirely new panel just to talk about the accounting side. But you know, let's. I do want to move on. I think with this was, you know, we covered a lot of different things here in terms of the exposure to digital assets for high net worth. From, you know, are they going direct or indirect? You know, how they're securing those assets and the insurance side, and even the accounting. And I want to move quickly into sort of, you know, the future, looking 5 to 10 years into the future. And we've only got a few minutes, 4 or 5 minutes left here. But Mariana, maybe you can share with us your crystal ball on the future. How will institutional involvement in this industry change, you know, in the next 5 to 10 years?
I don't expect it to change that fast, to be honest. And when you talk about 5 to 10 years, it might sound like a lot. And it is a lot in this space because it evolves so fast. But preparing institutions and having a new asset class, as Irfan mentioned, it means a lot of things for us. Right, when you have a nascent, technology stack, and then you can just plug and unplug things, that doesn't seem like a lot. But from our side, it is a humongous effort, right? You're talking about hundreds of people, processes, and you know the level of potentially the level of assistance and operational. Risk management and information management and all these kind of things that you have to do in order to support something like this at an institutional level. It is not to be taken easily, right? So I think it will take a long time, but I also think that it's here to stay and it's not going to move back. You don't have any other way but to embrace it, right? And to embrace it now before you are caught with the fingers in the door and then you have to run. So I would invite everybody to open their eyes and start thinking about, again, what's that strategy going to be? what is the risk appetite, in which kind of asset classes are they going to start preparing for those opportunities, that to seize them, how are they going to deploy those strategies, so then they can start preparing for the change of infrastructure that it requires. And it's not only, again, on infrastructure, but it's at all levels of the organization. So it's product management, it's operational risk management, it's at so many levels that yeah, I think we still need to experiment, learn, adapt, and try again.
Absolutely. And I guess Mohammed and then Grace, then we've got to wrap up. But Mohammed, do you see major divergences between long-term government policies and how this will affect institutions? And then for Grace, after that, what's the most exciting opportunity you see about the future here?
Yeah, I think on the thanks for that question, and I do think based on what we just mentioned earlier about how the space will continue to evolve, and regulatory, everybody is learning right now, so that will continue. But I think at one point we will start to have more clarity coming out across board, because everybody's expected it, everybody is working on it together, and eventually we have that clarity, which brings that adoption. And I think that piece will probably, to tie it to the previous question you had to Mariana, will actually, in my opinion, accelerate the whole growth of around digital assets. So I think for the moment it's more like we're putting the rail and infrastructure, but once it's ready at an institutional level, probably how just also we see it in the retail market. Once we had the initial basics are there, then the opportunity is just endless. We started to see a lot of emerging new trends, and I think that those trends will continue to evolve. They will continue. We will see even business models that are going to evolve. Institutions will need to adapt to those, and even bring some of those, depend on the opportunity. So things like tokenization, I think, in my opinion, will be something huge for the future. Amongst other things. So crypto going mainstream, that is totally going to be the case. And things which we probably haven't even thought of, and how they will impact us will also, we all want to know what does DeFi means to all of us, and how can all take a piece of that. We just to see whether we can leverage piece of that of innovation or not. So I think looking at all of those, and whilst also having the regulator on the side and government looking at all of those, approaching it in a more open and a smart way, I think will benefit the everybody in this space.
Yeah.
Grace, go ahead.
So so following on my side, I'll be greedy and have one for our traditional finance as well as one for up and coming fintech. So I think for the traditional finance entities that are like banks and all that are looking to enter in this space or have started making endeavors to enter this space, I think one of the most exciting opportunities is actually in the space of derivatives. So thus far, of the crypto asset underlying derivatives have always been in the unregulated space in terms of perpetual swaps, in terms of a lot of the different types of products we are seeing done on various types of exchanges like Bitfinex, FTX and all that, which have been tremendously popular, but those are the main realms of liquidity. I think it'll be very interesting to see once all the banks are getting more interest in this, how they really explode in terms of products and services in this space and offerings in terms of that amongst the different types of accredited and professional investors. So that is what I'm looking for, which I'm watching with keen interest, because we have seen greater uptake in terms of us drafting a lot of the digital security annexes for ISDA documents, for instance, or advising on lending contracts. So that's one for the traditional space. For the fintech space of all the exchanges and the like of our clients, what I'm hoping together with them is more banking solutions. Thus far, it has been tremendously difficult to obtain stable and sustainable banking solutions because of this fear of a lot of these entities not being licensed, not being established, or the reputation impact of that. But as more traditional financial institutions once again enter this space with their products and solutions, it is the hope of many such entities that they will also get comfortable with banking some of the players in this space, because I think that is what is needed for more secure fiat solutions.
All right. So just, I think overall this has been a very insightful discussion. Thank you again to our incredible panel. And I can say I've personally learned a lot, and I'm sure our audience will agree as well. I'm encouraged by, looking at where institutional capital is going and the involvement and growth in this space. And as we heard, it is here to stay. Now, there's many other incredible presentations and panels from experts all around the world remaining at FinTech and PayTech Connect Summit APAC 2021. So what better time to be able to learn from incredible individuals from the comfort of your own home? Be sure to check them out, as I know I will. Thank you again to our incredible panelists for making the time to share your insights here today.